dear guests, I would like to welcome you in the Ethics and EBRD workshop. We are very glad to have you here, and we are very glad to have here a very nice and very talented and experienced board of panelists and presenters. And I hope that this whole workshop will prove useful. The way that the workshop is structured, there are two different sessions. The first session has to do with direct investment, and while the second one is with indirect investment and listed private equity. So in between there is a 10 minutes, 15 minutes coffee break. So the way that each of the two sessions are structured is that there is a panelist. All the presentations and all the material will be provided to you electronically, so you are going to have it as soon as the workshop is over. And there's going to be a keynote speaker who's going to present the idea of the discussion during the panel that will happen afterwards. And I will start with the first panel, and with the first keynote speaker, Daniela Peterhoff from Oliver Wyman. I will let my colleague Georgia Moula to do the introduction of the panel afterwards, but I will just introduce Daniela since she's the first speaker. Daniela is from Oliver Wyman. She's a partner in Zurich, and she has been with the infrastructure type of business. Infrastructure is exchanges, clearing houses, and CSDs for a long time, and she also has a really big experience with SME financing. So she's going to present unlocking SME funding for growth. So, Daniela.
Thank you very much, Nikos. Probably have to lower this a bit. Thank you very much, Nikos. So it's a pleasure to be here tonight, ladies and gentlemen. Thank you very much for inviting me to speak at this exciting event. The topic of my presentation is around unlocking SME funding for growth, and it draws upon perspectives from other markets that are applicable to yours, but it also provides an outlook on potential solutions that we have seen elsewhere that one could envisage applying here. I invite you to pose questions towards the end of this as we move towards the panel, which will discuss this in further detail. So if we look at the state of the world in the SME financing space, and particularly the relevance of SMEs to economies, in most of the global economies, actually SMEs account for a significant part of the businesses in the relevant jurisdictions that you're benchmarking yourselves against, looking at OECD and non-OECD countries, looking at EU countries, irrespective of that they are a significant driver of employment and also of economic growth. What we find crucial from that perspective is particularly the employment contribution and the contribution to sectoral developments in particular markets that we've been studying over the years. For instance, the US, the UK, Germany, where we've worked closely with industry associations, including the ones represented here today. But also different investors, private equity community, and the exchanges to develop new methodologies for improving financing to SMEs. At the same time, if we look at the financing opportunity and the constraint on SMEs at the moment, this is taken from a study that we did across the globe, as you can see, where we can see that a significant credit gap exists in most markets in the SME space, and this is in many cases driven by a gap in the bank financing, and in many cases it is at significant levels of above 50%. Now, this poses the question: how do those SMEs that are underserved in those markets finance themselves? What are the mechanisms that they apply, and what are the opportunities that we can derive from that? What we see in the markets we've looked at is that in most cases capital markets activity is underrepresented, and there's a level of bank mistrust in certain sectors of the SME community that have driven the financing gap that we're illustrating here. And it's for many of the SMEs, this is a significant constraint to their growth. If we look at statistics covering the number of SMEs in Europe alone, to quote a few highlights on this page, there are over 20 million SMEs, which are typically falling into the buckets that we're highlighting here, so both large domestic corporates, but also mid-cap corporates and the SME part. And many of those are eligible to actually be listed on a stock exchange. But many of those have not discovered this channel of financing for themselves. So particularly over the past years, the global financial crisis has left its mark on these SMEs. So we've actually seen even more caution, both in Europe and outside of Europe, with respect to bringing SMEs on exchange. And we've seen that, for instance, in the development of SME-related marketplaces and segments, which were very popular, let's say, 10, 15 years ago. Many of those reached their peak in the pre-crisis period, and then either were taken off the market or maintained the level of listing that they had achieved before crisis and did not grow very much further from there. So following the crisis, we've seen a little bit of a slowdown of the take-up of SME activities on exchanges. And this has led across the globe, and particularly in Europe, to an overall reduction in the quantity of SME lending that was given out to the market, but also to an increase in the price of financing which the individual SMEs can quote to us, and which we've also been receiving feedback on from the SMEs we work with and speak to, that the price increase has made it more difficult for them to manage the trade-off between looking at new growth opportunities and new financing mechanisms, but at the same time having to face this significant cost increase. As we know, in Greece there are over 600,000 SMEs with an employment contribution of over 80%. So from our perspective, this question is particularly relevant for your market, as we know, and we know from the initiatives of the stock exchange around the alternative markets, so the INA, the corporate bonds initiative, as well as the listed funds initiative, that there are a number of solutions out there that are currently being developed and being enhanced to service this market. So therefore, I think we should use this workshop and the subsequent panel to work out some of the key concepts and USPs that Greece can benefit from in leveraging the opportunity in a more effective fashion, and bringing together the community that is represented here tonight in this endeavor. When we look at the financing picture across Europe, we've done work, for instance, with the ECB on that, also with AFME, for instance, also represented here tonight. We also do look at the comparative cost of funding for SMEs, for instance, here in Europe, compared to large caps. And what we see is that the financing cost has become much higher in relative terms for SMEs as well. So we see a widening gap between the financing costs of the large caps and the SMEs, which held against the economic contribution is a further disadvantaging of the sector. This has led to more caution driven by Basel III and also risk consideration on the banking sector, which calls for new opportunities and new mechanisms for financing, some of which we would like to outline tonight. This graph is taken from a study we did in the sector, particularly around different credit mechanisms and the level to which these are being leveraged at the moment across European markets compared to Greece. I think the key point here is, again, the impact of the deleveraging on the industry and particularly the Greek economy and bank financing, but also again, it highlights that the traditional mechanisms for financing are maybe not the most appropriate channel to look at singularly, given the current environment. Now, when we look at in more detail at the actual SME funding setup and how that is structured across European markets, we can see that the share of bank lending to other financing mechanisms has started to shrink since the financial crisis, with a few fluctuations in between. And it manifests itself in the latest figures, which show that SMEs are increasingly looking at other opportunities, for example, trade credits or equity or private lending, various other channels to improve their growth opportunities. At the same time, we know that IPOs are under pressure on exchanges across the globe, so it is, for many exchanges that we work with, more difficult to fill the IPO pipeline today than it used to be in the past, as a result of the listing cost, as a result of the choice of the companies to list, but also due to growing competition between the listing venues, which is getting more accentuated. So you need to strike a balance between finding the right IPOs, but also seeing the number of companies gradually reach a limit. And I think in that trade-off, you're actually still, from a Greek perspective, in a very good place with a good universe of companies still out there that one should leverage. What I want to highlight here as well is that there are a number of parallel processes ongoing in this area, particularly around delistings, companies turning back to the private financing mechanisms. So that is obviously a phenomenon which is driven by the life cycle of the SME and by the development stage. And I think it's a normal phenomenon and part of the cyclicality of the financing industry as such, but should not be considered as an adverse trend to the opportunities we highlight here. So we rather think that the exchanges in particular, but also all the other stakeholders represented here tonight, should take this as an opportunity to follow the companies in the longer term across the financing cycle to really enable them to use the best channels at all times. And to quote a few examples here, what we do see exchanges doing at this point is, for instance, in the German market, in the US market, in the French market, is create additional opportunities for companies pre-IPO. For instance, Nasdaq Private Market brings together investors and companies a few years before an IPO. So in some layman's terms, it's described like a shopping window for companies, which you can screen at a very early development stage. And this enables the community to select the best companies. It also increases transparency if the companies actually get screened through a stock exchange, which raises the standard for the companies that are being selected. And at the same time, it broadens the horizon for the investment. And we do believe that this is a key factor in improving the financing of the SMEs across their life cycle, to look at this across all development stages, which the new mechanisms enable. As part of our studies, we've also looked at the different mechanisms that SMEs are applying at the moment, and you can see equity and debt issuance still very low in the statistics due to capital markets being an unknown phenomena, due to lack of knowledge about how these financing mechanisms are structured, but also in many cases due to, let's say, a lack of a marketing access to the companies by the stock exchanges. And we think that, therefore, in some markets, there's actually a case for linking the exchange sector more closely with the private equity industry and with the banking community to educate companies at early investment stages about the different means of financing to increase the share of equity and debt issuance, as we see here, currently being underrepresented. Across Europe, there's the concept of the Capital Market Union, which is currently being used, ladies and gentlemen, to actually bring together the different elements of the ecosystem to improve the financing for SMEs. So whilst the US market has 75% equity financing, the European market only has around, if you calculate nicely, 25%. So it's like the two markets, Europe and the US, are turned around vice versa against each other. And the question is how to change that phenomenon. And Juncker laid out a CMU-based plan for that, which includes the elements that you can see here. Essentially looking at more efficient supervision, reciprocity, more balanced investor protection, improving financial education, introducing corporate governance rules, catering to the whole ecosystem of SMEs, lowering systemic risks, advancing in the recovery and resolution planning of the banks, but also the stock exchanges, introducing more credible mechanisms of price discovery, preventing market abuse, and last but not least, also standardizing and harmonizing the rule books. From our perspective, this set of developments is again supporting what you're aiming for, because it broadens the eligible universe of SMEs for potential access to capital markets. It also, in some respects, creates a level playing field, which can be seen as an advantage, but obviously also as a drive to be quite quick at creating solutions, because the competitive field is becoming more opened up as a result. Now, when looking at the SME financing ecosystem, we often like to quote the benefits not only from the perspective of the SME, which obviously is gaining access to long-term financing, will gain access to more transparent markets, attract venture capital investors relative to other financing channels, but also put discipline on SME management. There are also quite a few advantages for the broader ecosystem, particularly for investors. So, for instance, you create a more diverse set of opportunities to invest into by putting SMEs onto capital markets. you create a more regulated and transparent environment. And ultimately, there are also areas where you can really estimate the GDP impact of these measures, which we estimate at 0.1 to 0.2%, if the addressable funding gap were to be bridged by capital markets mechanisms to 25% of the gap. The remainder still being filled by other mechanisms. Now, I'd like to close this presentation and lead over to the panel with an overview of the various mechanisms that we've seen across the globe being applied to be more creative about SME financing. So, as you can see from the picture, there's actually a broadening of the ecosystem here. So we're not looking only at the exchanges and the SMEs, but we're looking at the banks, as well as the institutional and retail investor base. And we're looking at a broad set of platforms. So starting off with the classic equity platforms, which have succeeded 15 years ago, but some of which have leveled off today. We do see a number of alternative venues, including debt platforms and alternative listing venues, currently emerge. I'd just like to highlight a few of these, and these are by no means mutually exclusive initiatives. So there are information platforms currently out there created by some of the leading exchanges, which, as I was saying, match investors and issuers together, which make it possible to find the company well before the IPO, to really bring it into the right evolution path and support it along the way. There are pan-regional platforms like AlterNext, like a Malta-based European SME exchange, which are evolving, supporting SMEs across multiple markets. We do think there's also a significant case for government-supported platforms, like the US IPO task force, like venues that would include tax and financial relief for companies and for investors, which we think could be a key setup to think through, particularly also for this country. And then last but not least, we also think that there are elements to the ecosystem that need to be added as well, like, for instance, rating databases or credit brokerages that would support the development of the SMEs. We think there's a particular initiative from the Athens Stock Exchange that merits attention and further discussion on the panel, which is around listed funds, which essentially would create a vehicle to invest into multiple SMEs across the country, enabling you to diversify your investment, to invest into specific sectors or topics, and ultimately create more fungible mechanisms for SME financing, leveraging what we've learned in other markets, but essentially creating a basket of opportunities across this market and potentially pan-regionally. I now propose that we spend some time on the panel discussing these opportunities and particularly the opportunities for Greece. Back to you, Georgia.
Well, thank you very much, Daniela. You will join us, of course.
Yeah. Okay,
because you haven't finished with your contribution, I'm sure. Thank you very much for a very good presentation, very comprehensive, and a very good starting point for our discussion. I think the situation you described that actually exists around Europe for SMEs very much portrays what is the case here in Greece. Only, of course, being Greeks and being Greece, we're a lot more extreme.